You know, winning at the tables is one thing, but for any serious gambler, the real high-stakes game, the one with the highest pot, is played against the IRS. And the difference between being a recreational player and a professional, it isn't just a title. It's an absolutely critical financial distinction, and it has some huge tax implications. So this is the question that's at the heart of it all. If gambling is your job, your actual livelihood, can you file your taxes like any other business owner using a Schedule C? The motivation here is pretty clear. It's to escape this really punishing tax trap that the IRS has set for amateurs. But as we're about to see, just declaring yourself a pro, well, it's not nearly as simple as it sounds. All right, here's our game plan. First, we're going to dive into what's known as the AGI Trap. This is the big problem every amateur gambler faces. Then, we'll look at the potential way out, filing on Schedule C. After that, we're going to tackle the two massive hurdles, passing the Supreme Court's famous Groetzinger Test and then trying to navigate the constantly shifting rules of Tax Code Section 165D. And finally, we'll have to ask, with all the risks involved, is filing as a pro even worth it anymore? Okay, so let's start by unpacking the core problem. For any gambler who is not considered a professional in the eyes of the IRS, the tax code creates a really strange and frankly very costly situation. It's called the AGI Trap, and what it means is you can literally break even for the entire year and still wind up with a massive tax bill. Sounds crazy, right? Well, here's why it happens. It's all about a disconnect. For a recreational player, all your winnings are reported as other income on Schedule 1. This is what we call above the line. It directly pumps up your adjusted gross income, your AGI. But your losses, they're an itemized deduction on Schedule A, which is below the line, so they don't reduce your AGI. The result is just bizarre. Say you win $100,000 and you lose $100,000. You broke even, but your AGI still jumps up by the full 100 grand. So why is that such a big deal? Why is an inflated AGI so damaging? Well, because so many other things are tied to it. A higher AGI can mean you start losing valuable tax credits for things like childcare or education. It can limit how much you can contribute to an IRA. It can even trigger higher Medicare premiums. And get this, in states that base their income tax on your federal AGI, you could end up paying state income tax on all your gross winnings, even if you actually lost money for the year. It's a huge problem. And that, of course, leads us to the solution that so many serious gamblers look to: filing as a business on a Schedule C. Now, this does a lot more than just change the form you fill out. It fundamentally rewrites the entire tax calculation, and it provides a direct shield against that AGI trap. And I mean, the difference is just night and day. On a Schedule C, only your net profit actually flows through to your income. Your losses are subtracted from your winnings right there on the form. This also means a pro can still take the standard deduction, which is a big deal for a lot of people. And, critically, a professional can deduct ordinary and necessary business expenses, things like travel, data subscriptions, analysis tools, all of which are completely off limits for an amateur. But, and this is a big but, here's the catch. You don't just get to decide to file on Schedule C. You have to earn it. And the first, most significant hurdle you have to clear is meeting a very strict legal standard for what even constitutes a trade or business, a standard that was set by the U.S. Supreme Court itself. Now, to really understand the rule today, it helps to know a little history. Before 1987, the courts used something called a goods and services test. And the logic was, since a gambler is playing for their own account and isn't offering a service to the public, like say a bookmaker is, they couldn't be a business. This rule effectively locked almost every gambler into that AGI trap we just talked about. Then, in 1987, a landmark Supreme Court case, Commissioner v. Groetzinger, came along and changed everything. The court tossed out that old test and established a new, three-part standard. To be considered a professional, your gambling has to be pursued with continuity and regularity. Its primary purpose has to be earning a livelihood, and it must be conducted in good faith with a real profit motive. And here it is, the exact language from the court's decision. This quote is really the bedrock of professional gambler status in the entire U.S. tax code. You see how it emphasizes this isn't about just some occasional bets for fun. It's about a consistent, large-scale effort that functions as your job, even if you happen to have a losing year.
Now, because that Groetzinger standard is based on the specific facts and circumstances of each case, the IRS and the lower courts needed a more practical way to apply it. So they've adopted a more granular test. This test, which comes from Treasury Regulation Section 1.183-2, was actually designed to separate hobbies from businesses in general, and it's the framework they use to decide if you're truly a pro.
The test includes these 9 factors. And while, they can all play a role, for a gambler, a couple of them are just absolutely critical. So let's focus on the 2 that the IRS is going to scrutinize the most if you get audited. First up, the manner in which you operate. Bottom line, do you act like a business? This is completely non-negotiable. You have to have meticulous, contemporaneous records of every single session. You need a separate bank account for all of your gambling activity, and you cannot commingle your personal and gambling funds. This is the very first thing an auditor is going to ask for. Second, and you could argue this is the most crucial factor of all, is time and effort. In that original Groetzinger case, a key fact that swayed the court was that the taxpayer spent 60 to 80 hours per week at the racetrack. This can't be a weekend hobby. The court is looking for a full-time commitment that proves this is your actual livelihood. Okay, so let's say you do it. You clear the Groetzinger hurdle. You've proven you're a professional. Congratulations. Unfortunately, that's not the end of the story. The very section of the tax code that governs your deductions, IRC Section 165D, has become an absolute minefield of legislative changes. This timeline really shows a dramatic reversal of fortune. For a little while, the Mayo court case gave pros a huge advantage. It let them deduct business expenses even if it created a net loss for the year. But in 2018, the Tax Cuts and Jobs Act, or TCJA, slammed that door shut. It lumped your losses and your expenses all together and capped the total deduction at the amount of your winnings. Then, another law, the OBBBA, made that rule permanent and added a truly punishing new twist. And that new twist is this number, 90%. Starting in tax year 2026, this new law limits your total deduction for all of your losses and expenses to just 90% of what you actually spent. For a professional gambler, believe me, this changes everything. Just look at this table. It demonstrates the brutal math of that 90% cap. Look at the break-even scenario. You win $100,000 and you have $100,000 in losses and expenses. Simple, right? But now you're only allowed to deduct 90% of that, which is $90,000. So the result? You now have $10,000 of taxable income, even though you didn't make a single dollar of profit. This is what we call phantom income, and it's basically a tax on breaking even, or even on losing money. So, where does all this leave us? Let's try to synthesize everything we've talked about to really understand the high-stakes reality of deciding to file as a professional gambler in this new, much more restrictive environment. The big takeaway here is that if you file as a pro, you have to be ready for an audit. The IRS sees this as a red flag. To defend yourself, you need a business plan, you need proof of study, and you need a detailed contemporaneous log, which means you record your sessions as they happen, not weeks later from memory. But most importantly, as I said before, you need that separate bank account. Commingling personal and business money is the absolute fastest way to lose your case. And here's the final, really painful paradox. As a professional, your net profit on Schedule C is subject to self-employment tax. That's for Social Security and Medicare. Under these new OBBBA rules, this means you're going to be paying SC tax not just on any real profit you make, but also on that phantom income created by that 10% disallowed loss. You are literally paying tax on money you never actually earned. Which brings us right back to the ultimate question. Filing on Schedule C is still the only way to avoid the recreational gambler's AGI trap. But with the OBBBA's punitive 90% deduction cap now creating this taxable phantom income, is it still a winning strategy? Or has it become a losing bet? That's the high-stakes decision every professional gambler is now going to have to make.